Good morning. Happy April. We got some big news stories for you that have hit the market. They've just hit the market. So if you're sit back because I got 4 huge stories for you. First, Tim Cook announced his retirement. Apple stock, I don't know what it's doing. I can't see the chart. Tim Cook announced he's retiring. Second, Google has scrapped all their plans for AI. They're moving the headquarters to Florida, and Ron DeSantis is now becoming chairman of the board. I can't make this up. I mean, again, this is your Magnificent Seven that are coming to a crash. Elon Musk said he's selling Twitter to Facebook. And in that move, Mark Zuckerberg was just announced as Donald Trump's VP running mate. Can't make this again. Happy April Fools, douchebags. Yeah, it's April Fool's. So it is also 9 years ago today, and this is no April Fool's, actual happening. I picked up Daisy. So my dog Daisy, I will put a picture of her in the newsletter as an honoree. It is her gotcha day, 9 years. We had a pretty big seizure last night to celebrate at about 1:30 in the morning for about an hour or so. But happy gotcha day for Daisy. The Qs. I'm outlining this just so you're aware. Oh, one thing before. Alpha picks. I know I go over it a lot. Alpha picks, 133% performance versus the S&P at 36. It's 2 data-driven stock picks per month. If you have not watched my Steve Kress interview on YouTube, go and watch it. I will include that again in honor of him having another alpha pick. He's the quant master of Seeking Alpha. So when you see me go to Seeking Alpha and you see all the quant ratings, he's the guy that wrote all this stuff, that program. So he's the guy that programmed this algorithm. It is basically on fundamentals. Access to Alpha Picks, over 20 stocks on day one. If you want to sign up for Alpha Picks, there is a new one today. I found it super interesting. And if you go to Seeking Alpha, if you are Alpha Pick subscriber, you can go over to Seeking Alpha, Alpha Picks in your investing groups right here, and you have access to it. Eat up this restaurant stock. I found it super interesting reading through, and I just scanned it. I didn't read it in detail, but I found it interesting that this is a year-to-date XLY winner. They're beating the XLY, and that's the segment that they're in. And that I found it interesting that they picked one and highlighted that, where I wrote this weekend Q1 review and how I'm finding stocks for Q2. Yes, it's a paid newsletter. I also patted myself on the back in the fact that I had said in my predictions for 2024 that XLF would be one of the biggest winners, and DPST may be a great way to play. I was wrong about the DPST part. I was right about XLF. So I wanted to make sure that everybody knew who subscribed to Alpha Picks that there is a new pick out there. I'm not super excited about it, but I could have said that about 10 of the other or 7 of them that hit 100%. So, go have at it what you want. As far as the Qs go, well, let me one more thing. If you go to Daily Stock Pick and the 4th link down is Webull, I've made the decision this week, maybe today, probably today. I have $6,000 in my Webull account now. $6,000. I am going to completely get out of my Webull account. I'm going to sell every stock in there and start out with cash. Over the next week or two, I will be adding stocks to that portfolio, and I will be trying to beat SPY for Q2. And what I'm going to do is, if you want, Savvy Trader, I will post whatever pick each morning. I will post whatever pick, but in my trading portfolio on Savvy Trader, I will put the picks in there. Just so you're aware, I have 2 portfolios in Savvy Trader. And you can follow one for free, the core portfolio. The other one does cost you. And the reason is Hamed posted this as on Savvy Trader on Instagram the other day. He spent close to $3 million building this platform. That's why I have the trading portfolio up there as a charge, is because I know how much this costs to actually keep up. But the core portfolio, that's not one to sneeze at. I mean, let's look at year to date. Let's compare it against the Qs. The core portfolio is up 22% versus the NASDAQ, which is up 8.42% year to date. I'm not at 1 year yet because I started it in June of last year, so I'm not there. But you can follow this for free. This isn't anything that you need to pay for. And these are 35 positions that are solid. So when I say I'm selling out of my Webull account and starting it, I think you should sign up for Webull. And maybe when I announce these things, you should sign up and buy them as well. I'm not a bad stock picker. I am not a great defender of my capital, but I am a good stock picker. That's one thing that I know. So here's the Qs. I've drawn these two lines in here, and you can see I pulled the volume back to December 28th. And the reason is because that's the day that it first started to fall. And then you can see it, and I want to see the volume shelves that come out. So I see two things. I see a resistance line coming up here in January, which rejected off. And then it provides you support here, right in the February timeframe. And this is a 4-hour time frame. So this is, the algorithm, it makes you 24% over 2 years. If you bought and held, you make 20%. And again, the algorithm is 4-hour algorithm, 4-hour candlesticks in Trendspider. And when you sign up for Trendspider, you get the 4-hour algorithm. But I see right here, I see some resistance there in January. I see some support back here, that lost support back in February. And then what do I see? I see some resistance here in February, right there, another resistance in February. And then I start to see some resistance where it bounces off again, but there is some support here. And so I think 441 is your support level. And I think if we break through that, then 430 might be your support level in the Qs. Again, this isn't scientific. This isn't absolutely. This is just kind of my Rain Man look at this stuff. But what I also see is right here, when you pulled this back to December 28th, I see a big volume shelf around 436, 435. There's been a lot of talk in the news media about a pullback. I don't necessarily think that a pullback would be horrible. I don't think you're going to see a 5 to 10% pullback. I think you see a 2 to 3% pullback. And that's where I'm going, is a 2 to 3% pullback. And I'm looking at this as being maybe the range that we trade in during this time. And you can see the trading range right there. It's a 2.3% range. So I think that's where we're looking at the Qs. Now, mind you, we'll get to this later. There are a ton of stocks that show bullish right now. Our inflation reading, which was Friday's podcast, was okay. It was revised upward. Markets ignoring that. Markets completely ignoring that. So we're off to the races. Q1, we'll go over a little bit of Q1 in a little bit, but biggest movers today, LI advanced 4% on Q1 delivery expectations. They achieved a record 700,000th cumulative delivery in March, becoming the first Chinese emerging new energy automaker to reach that milestone. Canoo, GOEV, rose 5% ahead of its Q4 earnings report scheduled to be released after market close today. The market's optimism, GOEV, do not invest in this one. You can trade it on short time frames. This is going, they are up, they are up 3.92% in pre-market right now. This is a dying stock. Trade it. Just trade it. Expect something of a 10% kind of move in this one, but trade it. This is not something that you want to invest in. Biggest stock losers, 3M, plunged 13% as its faster growing healthcare business begins trading as a separate entity today. The spinoff separates Solventum's promising $8.2 billion annual revenue. It plunged 13%. This was well known. I mean, that they're kind of spinning that off and it trades as a separate company. So this shouldn't be unexpected. Let's see, you're down to $91. And you've got this gap that was filled. I mean, ironically, look at how great that gap fill was. That gap on earnings went from 107 down to 100. That's a 7% move. And what happened during that time? Well, you came back, it filled it and rejected off it. And now it's coming back down. And you know what? It's probably going to use this gap to fill on the way down, and then you'll wind up filling it on the way back up. I'm not a big 3M fan. I don't think 3M is worth investing in. Now, Catalyst Watch for this week, there's a couple of things. We'll go over this later. Tesla deliveries will be announced at some point this week. NIO, XPEV, Rivian, Lee, Lucid, the whole deal. Everybody announces their month-end deliveries, their Q1 deliveries, the whole thing. Volatility Watch. We've got Kellogg's. We've got Sirius XM. We've got Zevia. Earnings Watch, notable today, PVH. All day Fortinet will be holding an event today. Again, I love this Seeking Alpha Catalyst Watch because it breaks it down for you by day. Earnings Watch on Tuesday, PayX and Dave & Buster's. I traded Dave & Buster's all the time. Cal-Maine Foods, I think that was the one that benefited from the egg shortage. There's an event on Wednesday with Walmart. I mean, again, on Wednesday, you got Levi's, BlackBerry. I just watched the BlackBerry movie, which was actually really good for some reason. I really liked that one. And then Thursday, you've got Earnings Watch. You've got Lamb Weston. You've got Lindsay. You've got ConAgra. Our House will pay out a special dividend of 50 cents. That's a luxury retailer. All day, you've got Edwards Lifescience. My dad has a pig valve. Cow valve in his heart. He bought Edwards Lifesciences, EW, because he got a pig valve. Or a valve in his heart. He said, who makes that, to the surgeon right before he went under? And the guy said Edwards Lifescience. And he bought this around 2011 or so, I think. He's since gotten out of this, I believe. He got sick of it. But I think he bought it somewhere in 2011. I mean, he's enjoyed that whole run. Why? Because he had a freaking valve put in his heart. It is an example. Trade what you know. Trade what you use. I mean, this was a perfect example of what to do. So all the Catalyst watches right there. Yeah. Let's look at Q1. This is year to date. All of the spider sectors. Biggest winners: XLC 12.37, XLE 12.57. XLE, by the way, was the big winner. XLF 12.02. Went over it in the newsletter this weekend about how you use all of these spider sectors to find stocks that may win in Q2. Ironically, that's what Alpha Picks did. They looked at the year-to-date winner in XLY and they picked a food company. So not super exciting to me. Best performance of the S&P from Q1, SMCI. Will it do more in Q2? I don't know. I mean, your guess is as good as mine. I'm in at around 1,050. It's trading at 1,014. I think we're putting in a nice little range here between 850 and 1160, getting ready to make a move. Look at how it did this before, and it's made the move higher. Again, I think the valuation on this one is not crazy. I think we are running up against crazy earnings. Look at those, the earnings of next time. When you pull this back to May of last year, let's pull this back so that we can see it. Because I want to see the earnings. Let's see. I think we can look at it. Yeah. This is 2022. Look at November. Okay. Then you had January. Then you started to move and you went to $1.63. We went to $1.63. Then you went to 351. Then you're at 343. And as they started to move, the margins started to get bigger and they started to make more money. And then boom, 559. So where are you at now? At 559, your expectation on this one, it's big. It's big. Again, they just raised more capital. Your guess is as good as mine is what this one's going to do. But I do think it's a good opportunity for you to get into here. Again, that's the best performer. Second best performer, NVIDIA. Third best performer, shocked me, Constellation Energy. Fourth, DEC, Micron, huge. General Electric crept up there. Facebook, 37%. Energy, Marathon Petroleum. This is just a petroleum freaking company. Disney, 35%. So anybody that says that it's just a tech market and tech's what you have to invest in, Eli Lilly, Disney, Marathon Petroleum, General Electric, Deckers, shoes, 40%, Constellation Energy, 58%. It's broadening out. It is very clear it is broadening out. I also want to point out, and I'll put this picture, I didn't post this picture, but in Trendspider's newsletter this weekend, they pointed something out that was incredibly interesting. When we refine the seasonality data of QQQ, and if you didn't know, you can go in here in Trendspider and you can look at the seasonality of QQQ. And let's say you want to know, hey, how has it performed in the month of April in the past? And let's take this back. We'll go back to, we can go back, I think, to like 1999, March of 1999. We can go back 25 years. How is it done in April? 64% winner with a mean change of 1.75. Not a bad one. I mean, that's one of the best months here other than July and November. So that's pretty good. But what Trendspider did was they refined it for election years. The NASDAQ 100's April win rate dips to 33%. That is over the last 25 years. It dips to 33%, suggesting we may have a pullback in the broader market before we start that summer rally. And it is not, sell in May and forget over, I forget that saying, but it is not that. It is not that at all. So you look at those best performers and you can see, try and find some neighboring companies that may have something similar to them that have underperformed these companies, and maybe you have winners. Presenting your Q1 heat map. If your portfolio includes anything in red on this, you just didn't invest right. And I didn't invest right. Intel was down, put big on that one. Apple, you guys know I have huge on Apple. Boeing, Tesla, Nike, Gilead. There's a lot in this. Zoetis. There's a lot of winners. Look at NVIDIA. Look at Amazon. Look at Microsoft. This is your Q1 year-to-date heat map. It's unbelievable. So since the best performing quarter for the S&P since 2019. It's just a good quarter. Let's look at the Monday. We're going to go into energy right now because I find this interesting. Monthly setup on energy is almost too good to be true. The ETF has almost a 70% win rate, an average return of 4.38. We went over this before, but XOM and CVX are seasonally positive in April and even higher during election years. So XOM, ironically, has a cross up today in the 4-hour, and it's looking even more bullish. Yes, the MACD is super high. Yes, the RSI is super high. These are just two stocks that continue to go. You still have room to get to this. When was this? This was 2023. Still have room to get to that at 119. At 119. It's not much. You're trading at 116. But you still have room to get there. CVX, on the other hand, and I think I put this in the paid newsletter, but I'm not exactly sure where it is. But CVX, on the other hand, maybe it was in the free one. You have 14% upside to get to your all-time highs at 180. So, and Morgan Stanley points out that XLE is the best opportunity within the energy, within the spider sectors. There are two. Devon Energy just had a cross up. I still own this one. I have gotten this one wrong. My apologies to anybody that got out of Devon, but we're back at 50. We're back above. We're at 51.15. I did not sell out of my Devon. I said it clearly. I took it out of the core portfolio. I probably shouldn't have, but Devon's back. Oxy taking off again. Oxy is up 0.52. It's at 65. So energy is absolutely back. And when we look at the first quarter, where's my spider sectors? Oh, I guess I closed that one. Let's look at this. Yeah. XLE, XLK, and XLF. We're going to put those in. Well, I don't need to do that. You can go look at them. Let's look at XL. We're going to look over here. XLE, we said it. This one has been on a run. I mean, XLE has just been, it's broken out from its all-time highs right there at 93. And you're just breaking out above that one. So you're at 94 right now. If we look at a weekly on this one's going crazy. Oh, there is the all-time highs. Yeah. So you've got this to all-time highs at 104. So you've still got room to run on this one. XLE, let's look at XLK. which did not do very well in the first quarter. But if we look at the 4-hour algorithm, you're in at 211, and MACD's kind of down. RSI is in no man's land. Bollinger Bands cinching up. If we look at a weekly on this one, how are you performing? Still positive, still has confirmation, still going. MACD super high on the weekly, RSI super high. Is this one going to go? I don't know. XLF, one of the top 3 performers. We talked about this one a little bit. You look at this one from a 35 right there, and it's just taken off. You look at a weekly on this one, and yeah, you're at all-time highs. I mean, this one is a solid mover, XLF. And then XLI, which is industrials. This one, another solid mover. And if we look at the 4-hour algorithm, it's got you in at 112. You're at 125 right now. And we look at a weekly, it's super strong. And you're at all-time highs. So find your sector, find your stock. Morgan Stanley says Energy Transfer and WES may be good plays, according to CNBC. What I did on this one was I went to Seeking Alpha and I said, okay, we're going to go to ET. And we're going to say Energy Transfer, which is a good stock. Quanta has it as a hold. It's ranked in the industry at 22 out of 56. What's a better one? Tasco Energy Sector. I didn't particularly like this one. This is transportation and energy, gas, and storage. But you know what I do like? And I look down on this one. The one that I really do like is right here, MPLX. MPLX, $42 billion. It's got a huge market cap compared to the other. Kinder Morgan, solid company. But I would look at that market cap in the energy space and say, okay, let's see where I want a big cap energy stock. MPLX, this has been a solid performer. And that's kind of where I went to. And I said, okay, I may put more money into MPLX. The valuation is not crazy. It's a C+. But when you look at the PEG, the forward, it's a little bit extended. The PE is not crazy. But again, they're continuing to just put stuff out there. The momentum, B. Profitability, A. I mean, again, MPLX is in the core portfolio. I like MPLX. And so when you're trying to find stocks, this is what you kind of do. You use the tools that you have and go in there. But XLE, the monthly setup is looking really good. I would suggest buying energy for the month of April. Now, let's go and, this one's just junk. General Electric, 38% jump, leads Q1 gains among large cap industrials. General Electric is not one to fall asleep on. And what I wanted to do was take you on a little journey of General Electric in the long term, because this stock still hasn't gotten to where it has been historically. And it's being run very well right now. Here on the weekly, you had the Golden Cross here, where it was trading at 105 back in June of last year. Golden Cross, you dipped back down there in the October lows, back to about 107, 105, somewhere in that neighborhood, and you've taken off since October. That's been a huge move. Do you have more room to run? Up here, you're at 237. You absolutely have more room to run. Now, this doesn't mean this was a different company back here in 2017 than it is today, but they have turned this ship around. And so GE is not one to sleep on. Go and read this article. It led its first quarter. This is a great article about GE, Eaton, Uber Technologies, Caterpillar, Boeing. As far as it declines, Boeing could be a nice rebound move that like we're seeing. But one of the stocks that I really like is Tesla. And we've gone over Tesla. First thing is I did get a ceramic coating on my Tesla and I've got it back. I drove from the Atlanta airport yesterday to my house on version 12 of full self-driving. It is still not ready for prime time. It is still more nerve-wracking, and it drives kind of like it's a mix between a teenager that just got their permit and an 85-year-old woman in Florida who pays by check at the grocery store. Those are the two kinds of drivers that I'd say version 12 drives like. But we've talked about it before. I think with them releasing a free month of full self-driving to absolutely every car on the road for them, I think that changes the game for this because they're going to train their AI over a month now in what they've gotten in 5-6 years of data. And they already blow everybody else away from the data that they've gotten. So Tesla is not one to fall back on. Now, Tesla increases vehicle pricings as it rolls into Q2. At some point this week, we will get a delivery number from Tesla. My trading plan on this one, it's trading right now at 176. It's up 0.2. It's kind of pulled back a little bit. I think you're going to, until you get this delivery number, this one's going to flutter. And I don't know where it goes up to, but I will tell you that the prices that they were rolling out were phenomenal. I could have saved $5,000 over the deal that I got, and I thought I got a good deal. But within 1 month, I could have saved $5,000. This tells me a couple of things. First, I think the Model Y refresh, like the Model 3 refresh, I think the Model Y refresh probably is coming about sooner rather than later. It might be delivered next year, but I think you're going to hear some announcements to it. And as you hear announcements to it, I think that hypes the stock. Again, we're looking at this one as a hype trade. It doesn't trade on fundamentals. It's just you can't trade this one on fundamentals. If you go over here to Seeking Alpha and we look at the summary of this one, it's a hold across the board. Wall Street has it as a hold. It's covered by 47 analysts. The average price target is 197. You're 12% down from there. But most recently, they've all been taking it down. So I do like this stock, but I do from the long term think it could go to 140 just as well as it could go back to 200. Understand that valuation is crazy. But what I'd like you to do is wait for the deliveries, wait for the delivery number. And then after the delivery number, we're looking at the earnings. And the earnings are coming out April 15th. So you don't have long before these earnings come out. Now, they have not predicted deliveries for this year. The 4-hour algorithm makes you 57% on this versus losing 51% over the last 24 months. You've taken 23 positions. Your average win is 17. So I don't know if this is a winner or a loser yet, this 172 price. I don't know. The stock, the chart is just trading too funky for me to say absolutely. There's another strategy on this, and Trendspider has it. The Tesla strategy enters long on a bullish MACD cross and exits on a bearish MACD cross. Over the last 5 years, my algorithm's based on a MACD as well. This has been, this is a daily stock. And last week's entry is off to a solid start so far. Last week's entry got you in on this strategy, got you in at 166. This is just a MACD. And it's a daily chart. And see, bullish MACD gets you in there. Bearish MACD gets you out. Got you out right here on the bearish MACD. Right there. MACD crosses down. Got you out. This got you in, got you out. Got you in, got you out. So this bullish MACD that was right here last week at 166 got you in. Now my algorithm has you in at 172. Not horrible, not off that 169, but 172. Now the MACD is not crossing down yet, so you don't have a chance to get out of it. If we look at it from a daily standpoint, we can look at it updated here. The MACD just crossed up. Gotcha. It's off to a solid start. You're at 175. That's not a bad move. But again, there's a couple of strategies that you want to go after. The history of Q1 deliveries since 2012. If they delivered less than 422,000 cars, which is an enormous deliver. Remember, China is slow. China shut down from 6 days to 5 days. Here in the U.S., they've had to reduce their prices. So it's been going down consistently. I can show you where you could literally just walk into a Tesla dealer and buy a car that day. That hasn't happened before. So are they actually making more cars? They had some problems with the Model 3 refresh this quarter. The Cybertruck hasn't delivered as much as they thought. So that's why I say wait for this one. But I do think I agree with Kathy Woods. I agree with others. I think version 12 of the full self-driving is going to drive this. I think you've just got to get some bad news out of this stock. And then I think we're off to the races back to 250. The valuation on this one will never make sense. It will absolutely never make sense at all. Let's look at this. Yeah, I probably should have waited, but oh well. Here's how the largest stocks performed Q1 2024. Microsoft up 11%, Apple down 10%. My portfolio year to date is down 10%. Well, I think it's down. It's not down 10%. It might be down about 5%. Apple is down 10%. The rest of my portfolio is outperforming. That's just it. Nvidia up 82% in the first quarter. Google up 8%. Amazon up 18%. This is just based on the largest market cap. You go down to Novo Nordisk, 24%. MasterCard, United Health, ExxonMobil up 16% in the quarter. Walmart, 14%. When you take a look at this list and you see how much these names are up, it's not just a tech story. It's more. And so that's what you want to focus on. You want to focus on more. Alpha Picks, we talked about Alpha Picks. There's a new Alpha Pick. Spring Special on, there's just 2 days left for Seeking Alpha Premium. If you don't care about Alpha Picks, if you don't want somebody picking your stocks for you, and you just want to take a look at this right-hand side with the quant beats. Quant ratings beat the market. You can read this article. Seeking Alpha's strong buy recommendations versus the S&P total return, 10K investment. This is since 2010. Look at that. If you put $10,000 back in 2010, the quant returns you return over the S&P 500. You get, if you just put it in the S&P 500, $10,000 5 times, 51%. Great. But if you put 10% in the strong buys, you're at $246,000. So again, Seeking Alpha Premium makes sense if you want to pick your own stocks. If you're asking me about stocks and you're saying, should I buy this? And you want to just look at the quant, that's the way to do it. 100% that's the way to do it. So yeah, the Spring Special and Trendspider, they extended their offer. If you like my 4-hour algorithm, if you want to trade Tesla in the 4-hour algorithm, which actually is a great, if we just look at Tesla. So again, 57% versus losing 51%. If you want to get Trendspider, you can do that. All of these, remember, there's 4 links that I want you to pay attention to if you're interested in tools. The first one is Trendspider. You get my 4-hour algorithm. You get the 65-minute algorithm. You get all the watch lists. You get everything. Second one, Seeking Alpha Premium. We talked about that one. That's all about the quant, and it's all about the analyst, and it's about going to a place where you don't have to deal with ads. It's a central location for you to do your research. Alpha Picks. If you just want to sit back and get 2 data-driven stocks a month, and you want to beat the S&P, that's historically what you do. The fourth one is Webull. I told you I'm selling out of my Webull account. We'll finally do that. So let's take a look at some social requests. Taryn Barnes, Upstart. Any thoughts on if it could potentially return to its 2021 or 2022 highs? I will say absolutely not without even looking at it. I don't know what the highs were. We'll take a look at the chart. But I will say, Taryn, absolutely not. This is a company that does AI-based loans. And it's several times in their earnings, it has proven their artificial intelligence has had problems. So what are you looking at here? You're looking at a higher high right there in 2021. But all the way through this, you're looking at lower highs. Not higher highs. You're looking at lower highs. Now, you are looking at higher lows since May 2023. Still doesn't give me hope, because when we go over here and we look at Upstart, now this will benefit from lower rates because they're not making money. They're losing $240 million. Their forward PE is 124. They put out guidance and they're just not going to grow. It's just not something that they're going to grow into. It's shorted 36%. The only hopes of you getting back to this high of 2023, is that 2023? No, that's just back there, 72. The only hopes of you getting back to here are a short squeeze. That's it. I mean, here's the 2021, 332. You ain't getting back there. You're not getting back there. Short squeeze is the only way. It's not a company that's making money. If we go and we look at the quant on this one, This is one, in fact, one of the guys from the Big Short. He is heavily shorting this stock, heavily. He said it's just a scam, and they're actually losing money. It's worse than if they just take your credit score. So Upstart performing badly. It's a sell. It's a sell. If you have any money in there, I would take this most recent run up. Let's look at the 4 hour. I would probably look to sell. I would sell now. I mean, probably 29. You might get this gap fill up to 32. But in my mind, there are safer and better places to put your money. ITB, BLDR, Walmart, Target. Target has been on a tear. Uber, it's under 80. Shopify at 77, it's under 80. Roblox at 37 is probably a better buy than Upstart. So there's a lot of other places, Taryn, I would get out of that one. Steven, when is a good time to get into Apple? Lots of new products this year. If you've got an iPhone, there's a good test here. If you would take $100,000 and never buy an iPhone again in your life, or an Apple product, never buy an Apple product. It should broaden that. This is what Warren Buffett says. If you would never buy an Apple product, headphones, Apple TV, if you subscribe to that, iPhone, iMac, MacBook, iPad. If you have one Apple device, the time to buy a stock is now. I mean, we ironically, we have another cross up here at 171. I think anything in the 160s is a great buy, Steven. I think anything in the 170s is an okay buy. The problem you have is that Apple has declining revenues over the last, I think, 4 quarters or 5 quarters. It's a hold. As far as Wall Street goes, it's a buy. Now, this is heavily covered. The average price target is 200. I agree. At some point in time, this gets back to 200. But the valuation is where you've got a crazy dollar amount. And if you look at the PEG, the industry, the sector, is trading at 1.95 on PEG. This determines growth, profit and growth. The PEG is, PEG ratio, price to earnings to growth ratio is a valuation metric for determining the relative trade-off between price of a stock, earnings per share, and the company's expected growth. Look at that forward. It's at 2.78. Look at the sector median. You can buy cheaper growth companies. It's 42% above. Will they have great, fantastic earnings this time? I don't know. I mean, China's not doing great. China's got them banned up. Is China going to come out with something else? So you've got risk in this. Am I selling at 170? No. Do I need the cash? No. If I needed the cash, this might be one that I would get out of. But I don't need the cash. You're looking at a 52-week range of between 159 and 199. As you get closer to that 159, who's giving up their iPhone? It's ranked 10 of 27 in the quant. Your number 1, SMCI. Your number 2, I bought last week, Dell. Your number 3, Turtle Beach, here. Your number 4, Fuji, Pure Storage. So again, if you want any of those, you can get those. Apple, I think, is just one that I put away and just forget about. But what's a good time? Today. I mean, if we look at the Apple chart and we just look at a weekly, when was a good time to get in? I mean, you're sitting up here at 170. If you got in at 200, doesn't seem like a good time. But if you got back in down here in 2020 at 56, you're still feeling pretty good. If you got in here at 166 back in 2021, doesn't feel great, but it doesn't feel like, you lost a bunch. It hasn't been a great opportunity. It's the same thing as Amazon. We talk about these stocks and it depends on your outlook. Is it long or is it short? Because here on Amazon, if you bought way back here in 2021 at 185, you're finally starting to feel a little bit better. You didn't feel good down here at 86. If you bought here at 140 and you dripped down to 86, were you adding during that? What's a good time? Depends on your outlook. Devin Hoffman wants me to look at CISS. Will it bounce back soon? Devin, without looking at this chart, I will tell you, will it bounce back soon? I would say no. I mean, when you ask me that question, I'm pretty sure the answer is going to be no. What's the catalyst? That's what you have to ask yourself. If you know that there is a catalyst to this, then yes, it will bounce back. You have to create that story for yourself. You can't ask some douche on the internet, hey, will it bounce back soon? Without, having a story in yourself. If you don't have that story and you're just saying, will it bounce back? The answer is absolutely no. And this stock chart looks horrific. And I would be out of this one so fast. They have income of $9.29 million. Their PE is 0.2. Shares floated 158 million. Earnings per share. I mean, year to date is down 93%. No. I mean, I don't know the story on this one. Let's see if Seeking Alpha has anything on this. But I would say get the hell out. I mean, don't sit there and wait for this one. It's not covered. Nobody covers this. There's no Wall Street analyst. There's no nothing. So I can't find any news on it. Share sell-off following dry bulk carrier spinoff. Forget it. It's not coming back. I mean, I'm sorry to say it, but 3 cents, take your money out before it goes to zero. That would be, Devin, honestly, unless there's some type of story to this stock that I just can't see because nobody covers this one, there's no news. Will it bounce back? I'd say no. I'd say absolutely no. Okay, let's go over scans. Exxon. I told you, get into the energy sector. Energy is down today. I think people are taking profits after Q1. But Exxon at 115. I still think Chevron's probably the better one. I think MPLX probably has a better opportunity to make some money. But Marathon Petroleum, there's a bunch. If you want energy names, I've got an entire list of energy names to trade. Right here, energy names to trade and own. It's in Trendspider. So you can look at it. Look at LAC. This is lithium. This one's coming back 5% up today. This is in the energy name list. We can look at NXE, NextEra Energy. This one has NextGen Energy. NextGen Energy up 5% today. So Boyle is up 9% today. So you want to know what to trade? It's all in this. You can take a look at some of these names. Rig. Rig, I think, is probably a $10 stock. I've said it before. I've said that's a $10 stock, even down here at 4. I think it's a $10 stock. You've got a Golden Cross that's potentially coming. So trade your energy names. And if you want it, Trendspider, I give you those energy names. Simon Property Group. I pointed this out in my paid newsletter, and I hope I did. XLY was a disappointment compared to many of the other spider sectors. But, Simon Property Group was a real winner in this. The quarter to date, let's see, SPG. We'll go to SPG. Year to date, it's up 9%. This also comes with a 5% dividend. Performance over 1 year, you're up 50%. Now, this is part of the XLRE. XLRE was the most disappointing sector of the year. XLRE was down, I think it was 3%. It was the only spider set. Yeah, 1.32%. But within that, Simon Property Group was a huge winner. So find your winners in that one. We talked about XOM, SPG, Apple has a cross up, another bullish move. Do I think that this one is one that you buy? I think any extra money that you have, you could put into Apple when they announce AI. It's going to be interesting because I don't know what they put in the iPhone to make AI eye-popping, to move it forward. If they're just going to put Gemini in there and Gemini's going to work, well, Gemini's on your Google phones. So what's going to make this move forward? I don't know. I mean, does Apple have some type of huge plan? Doesn't look like it, but again, you have to kind of look at it. Are they going to be able to increase the App Store by, using AI, and adding AI services through the App Store? Maybe, a chatbot where, hey, Apple knows all of your preferences for your flights, your everything like that. And you can get on the phone and say, hey, book me a flight on Wednesday at a window seat, my favorite seat, on Delta out of Atlanta, if it's under $500. Yeah, you could say stuff like that. And Apple's the one that's probably going to do it. Ulta is one that I own. Elf has been the big winner in this category. Ulta has seen a pullback, we got another bullish run. 522. Are you coming up here to fill the gap up to 560? Alta could be. Again, 4-hour algorithm performs well. 42% over 24 months versus 30% buy and holding. You got this buy here at 522. If you want something else in the beauty sector, ELF is a good one. This is one that we watch. ELF had a buy here at 207. Right now, the algorithm has you out. It's pulling back. It's at 190. And if you like Ulta, here's what you do. You go into Seeking Alpha and you look and you say, hey, this one's a buy. Yes, Wall Street has it a buy. It's ranked number 3 out of 27. ODP and Bath and Body Works. This is, Damon has been shouting about Bath and Body Works because his girlfriend likes candles. I'm like, I don't find candles exciting. I don't even find Ulta too exciting. I just bought it. I do find Dick's Sporting Goods exciting but the valuation on Dick's is just a little crazy. That one's run up. But again, this is how you use my newsletter is you find these things and you can look at it. Square is one that I personally own. I own a bunch of this. I am way in the red on this one. I got rid of my PayPal and I put in Square. So if we want to look at Square, we have a cross up here on Square. It's down 2% today, but it does look like, you're running up against that resistance right there at 87. Look how it popped off here in March, and it tried to make it back up, and now today you're down 2%. But if we look at block and we look at this, and I want to look at charting, again, it's a hold in the quant, but if we go to charting, and I'm going to select symbols, and I'm going to do it against PayPal, because those are the two that I had in my portfolio, and I want to look at how they're doing short term. Square, big winner in 1 year. Year to date, they're about the same, 6%, 9%. 6 months, we can look, Square, big winner. 1 month, PayPal, big winner. 5 day, Square, big winner. 1 year, Square, big winner. 3 years, Square's a winner, but it's actually a loser at 63%. 5 year, Square's actually making money over 5 years. But so it depends on your time frame. But again, Square is a good one. Devon Energy, we talked about Devon. It's back over 50. This is one I took out of the core portfolio. I'm not adding it back to the core portfolio. I may find another energy name that I like better. I will do some research, but I do like energy for the second quarter. And my Webull account, it will have energy. So I like this one. But Devon Energy, it is up 0.58. It's at $50.48. I think that 50, if you're in this one, I think we take that opportunity over 50, and maybe we look at pulling this one back and trimming it. And that's what I'm going to look at doing. I'm going to look at getting out of this one, because it's not that I don't like it. It's that I think there are other names in the energy sector that probably will do better. Look at the valuation. Look at the revisions. The valuation is not great. You look at the PEG. It's trading under its peers, but I still don't particularly love it. Price to book, it's a little bit expensive. Price to cash flow, a little bit expensive. Dividend yield, not great. 1.63 when the sector median is 3.14. It's 23 out of 71. Vista Energy, maybe that's a better one. 3.98 billion, doesn't have a dividend. If we just let's look at the market cap of these. ConocoPhillips, 3.271. We can look at Coterra Energy. This one looks like it's a buy in the quant. Yeah. Profitability A, growth C, valuation C. But you've got an upward here of 29. You're trading at 27, and your 52-week high is 29. May have an opportunity there. If you take a look at some of these other ones, SM Energy, 1.26. Look at Pato Exploration, $2.14 billion market cap. Pioneer Resources, this is number 20. So you can take a look at these and say, okay, where are the opportunities? Where do I want to go? And that's probably what I'm going to be doing. So there's a lot of other names, crypto, covered call ETFs, energy names. There's a huge amount. Leveraged ETF, low cost ETF. Where do you see all these? You go over to my my Linktree, linktr.ee/daily stock pick, and you go down here, Daily Stock Pick newsletter on Substack. dailystockpick.substack.com. It's free. There are paid newsletters in here, but this is 100% free. Every one that comes out during the week is free. And you get, you essentially get all of the, go over here, archive, and we can just look at it. 329. This is Fridays. Tesla and Disney are the big ones. Disney has a huge shareholder meeting, by the way, Wednesday. And you scroll down to the bottom. Fridays didn't have scans because I was saving them for Monday. So 328, buy TSLQ before Tesla deliveries. I still think the Tesla deliveries will disappoint. And I think you're going to see TSLQ come up. So here's the scans, and you can see leveraged ETFs, spider sectors. I have a bunch of different things. Even Thursday, I put in at the end a little bonus section. I had a live portion of the YouTube on Thursday where someone asked me about the 65-minute algorithm and trading on a smaller candle time frame. I thought it was really good, and I thought it was a great educational tool. It teaches you how to look at different time frames, and it's like 5 minutes. It wasn't very long. I think that was good. So I think that one's worth it for you. If you have any questions, again, you go to my link tree. There's an email address. There's a bunch of social stuff up here. You can gift me if you've made money. I would say sign up for Webull. I would use any one of these tools. I will be off this week, Wednesday through Sunday. I am in Orlando. So I will be back Sunday night. Monday morning might be a short podcast. But if you have any questions, hit me up. Okay, talk to you guys later. Bye.
Every morning I wake up to the sound of the trading bell.